All right, diving into the world of aluminum today,
Oh, yeah?
we're going to be looking at National Aluminium Company Limited,
An LCO.
NLLCO for short,
Right.
using their recent financial reports and some stock analysis to see what's cooking.
Okay.
Think aluminum's boring. Think
Hmm.
again.
Okay.
We've got wind power legal battles brewing,
Interesting.
government tussles over mineral taxes,
Uh-huh.
and NLLCO swimming in cash
Oh, wow.
while paying out some pretty sweet dividends.
It's a fascinating case study, that's for sure.
Yeah.
To understand where NLLCO's headed, I think it's helpful to first grasp their current position.
Okay.
They've earned Navratna status,
Navratna status.
which basically means the Indian government recognizes them as a top-performing public sector enterprise.
Mm,
And they're not just big in India.
okay.
They actually run the largest integrated bauxite aluminum power complex in all of Asia.
Whoa.
Yeah.
So they're the real deal.
Yeah, they are.
Navratna status sounds impressive. But what does it actually mean in practical terms?
Sure.
Like, does it give them any special advantages?
It's a good question.
Yeah.
It's not just a fancy title.
Okay.
Navratna companies actually enjoy greater operational and financial autonomy from the government,
Oh.
which gives them more flexibility to make strategic decisions
Gotcha.
and pursue growth opportunities.
So more freedom to maneuver.
Exactly.
That makes sense.
Yep.
And on top of that, they're practically debt-free, right?
Precisely.
Which is like finding a unicorn in today's business world.
It is a rarity these days, for sure.
Yeah.
And that low debt makes them incredibly financially robust, giving them a competitive edge
Makes sense.
in a volatile market.
Yeah.
But here's where it gets interesting.
Okay.
They've actually had pretty weak sales growth over the past 5 years.
That's a head-scratcher.
It is?
You'd think a company with such strong fundamentals
Yeah.
would be crushing it in terms of sales.
You would think.
What's the story there?
That is the million-dollar question.
Yeah.
There are a few possibilities.
Okay.
Maybe they've been laser-focused on maximizing profit margins
Okay.
instead of chasing rapid sales expansion.
So quality over quantity.
Exactly.
Interesting.
Their operating profit margin, a whopping 39%,
Wow.
according to their Q2 2024 report.
Uh-huh.
Suggests this might be the case,
Okay.
but it could also be internal bottlenecks, challenges within their operations that are limiting their production capacity,
Okay.
or perhaps they've been slow to adapt to evolving market demands.
Right.
It's something for you to ponder
Okay. Yeah.
as we dig deeper.
Yeah, so a bit of a mystery to unravel.
Yeah.
But before we get too lost in the weeds,
Okay.
let's break down these financial reports.
Right.
First up, big news. Their net profit skyrocketed by 415%
Yeah.
year over year in Q2.
That's a significant jump.
It is.
For context, their standalone net profit this quarter was
Oh.
1,062.18 crore.
Okay.
A huge leap from 206.26 crore in the same quarter last year.
Gotcha.
This impressive performance is likely tied to the recent surge in aluminum prices globally.
Gotcha. So they're riding the aluminum wave.
They are.
But speaking of those financial reports,
Yeah.
I gotta ask,
Sure.
what's the deal with standalone versus consolidated reports?
Ah, good catch.
Yeah.
So, standalone reports focus solely on the parent company's performance,
Okay.
while consolidated reports incorporate the financials of all its subsidiaries.
Oh, I see.
This gives you a more holistic view of the entire group's financial health.
So it's like looking at the whole forest instead of just one tree.
Exactly.
Makes sense.
Yep.
Now back to that profit surge.
Right.
Their operating profit margin.
Yeah.
That 39% we mentioned earlier.
Right.
Is seriously impressive.
It certainly is.
Yeah.
That high margin indicates NLLCO's efficiency in converting sales into profit. Tells us they're keeping their costs under control and operating lean,
Okay.
which is a key indicator of a well-managed company.
And for our listener who might not be a financial whiz,
Sure.
could you quickly unpack what operating profit margin actually means?
Of course.
Yeah.
Simply put, it's the percentage of revenue left over after deducting the costs of producing and selling goods or services.
Okay.
The higher the margin, the more profitable the company is for every rupee of sales.
Okay. So NLCO is definitely squeezing the most out of every sale.
It seems...
And let's not forget the cherry on top.
What's that?
They just announced an interim dividend of 4 per share for fiscal year 2024-25.
Yes. And when you add that to the final dividend of 2 per share they paid out
Oh, wow.
for the previous fiscal year,
Okay.
you're looking at a total of 5 per share for 2023-24,
Wow.
which is a full 100% of the share's face value.
Hold on, let me make sure I'm following.
Sure.
Face value basically means the original price of the share, right?
That's exactly it.
So they're basically giving back the entire original value of the share
Yes.
as dividends this year.
That's right. It's a pretty generous payout to shareholders.
Yeah.
Which shows they're confident in their financial position and future earnings.
So they're sharing the wealth.
Yeah.
Which is always a good sign.
It's a good indicator.
But now let's get to the juicy stuff.
All right.
Those intriguing details tucked away in these reports.
Okay.
For example, NLCO hasn't recognized revenue from 2 of its wind power plants.
Interesting.
In Rajasthan since 2019.
This is due to a combination of factors.
Okay.
Mainly the lack of a power purchase agreement or PPA for these plants. And some ongoing legal issues surrounding the whole situation.
Wait, so they've got these wind power plants up and running.
Yeah.
But they're not making any money from them.
Right.
That sounds like a pretty big problem.
It definitely raises questions about their strategy in the renewable energy sector.
Yeah.
What's even more interesting is that despite not recognizing revenue from these plants, they're still charging the operating costs to their profit and loss statement.
So they're basically footing the bill for these wind farms.
Right.
Without reaping any of the benefits.
Exactly.
That seems like a risky strategy.
It certainly carries some risk.
Yeah.
If this legal battle drags on or doesn't go their way, it could impact their profitability.
Okay.
But on the flip side, if they win and secure a PPA, these wind farms could become a significant source of revenue.
Gotcha.
And boost their green energy credentials.
So it's a high-stakes game they're playing.
It is.
It's like they're going all in on a hand of poker.
Yeah.
But speaking of big bets, NLCO also dropped a cool 626.72 crore.
Wow.
To acquire the mining right for the Patangi bauxite mine.
That's a hefty investment, no doubt.
It is.
But it underscores their commitment to securing access to raw materials. Which are crucial for their operations.
Right.
Bauxite is the primary ore used to produce alumina, which is then used to make aluminum by securing this mine.
Right.
They're essentially locking in a steady supply of this essential resource.
So they're playing the long game, ensuring they have the fuel to keep the aluminum engine running.
Exactly.
But it's not all smooth sailing.
Correct.
It seems they're also tangled up in a legal battle with the Odisha state government over taxes on mineral-bearing land. And this one's been dragging on since 2005.
Yes. This long-running dispute highlights the complex relationship between companies involved in resource extraction and government regulations.
Wow.
The recent Supreme Court ruling, which affirms states' right to tax mineral rights, adds another layer of complexity to this already intricate situation.
A 19-year legal battle.
Yeah, that's a long one.
That's longer than some people have been alive.
It is.
It makes you wonder, is this just an LLCO problem? Or does it point to broader challenges within the industry?
That's a great question.
Yeah.
And one we should definitely explore further.
Okay.
But first, let's take a closer look at how these legal challenges, particularly the wind power situation, might impact an LSO's bottom line.
Right.
Because while they're clearly a major player with deep pockets, these ongoing disputes could create some financial headwinds.
All right, let's unpack those potential risks then.
Okay.
Because so far we've seen a picture of an LSO that's both impressive and perplexing. They're financially strong, making strategic moves, and paying out handsome dividends. But they're also grappling with some pretty substantial challenges.
Exactly. And that makes for a much more interesting deep dive than simply looking at a company that's firing on all cylinders.
Right.
It's these complexities and contradictions that reveal the true nature of a business and its potential for future success.
So are you saying a little bit of drama is good for business?
Perhaps not drama, but certainly challenges that force a company to adapt, innovate, and prove its resilience.
Well, in that case, NLCO definitely isn't short on opportunities to flex its muscles.
That's for sure. Yeah. And to understand how they might navigate these choppy waters, we need to zoom out and look at the bigger picture. Starting with what's driving those soaring aluminum prices.
All right, let's widen the lens then. And see how global trends are playing into NLCO's story.
Sounds good. The global aluminum market is a fascinating beast. Influenced by a whole confluence of factors. So you have demand for aluminum, a lightweight, versatile metal. Used in everything from cars and buildings to packaging and electronics. Continuing to climb as industries around the world grow.
Okay.
So
it's kind of like aluminum is the unsung hero of modern life?
Absolutely.
We don't always think about it,
Yeah.
but it's everywhere.
It is. And this steady rise in demand has been met with some supply constraints.
Okay.
We've seen energy shortages in key aluminum-producing regions, which have hampered production.
Gotcha.
Geopolitical instability, including trade tensions and conflicts, has also disrupted supply chains.
So it's like a perfect recipe for price increases.
It is.
High demand, limited supply.
Yeah.
No wonder aluminum prices are shooting up.
Exactly.
And NLLCO, being a major player in the aluminum game, is reaping the benefits?
Precisely.
Okay.
They're in a prime position to capitalize on this favorable market environment.
Makes sense.
But let's not forget that puzzle we talked about earlier. Why haven't their sales been growing at the pace you'd expect?
Yeah, that sluggish sales growth is still bugging me.
Yeah.
It's like having a Ferrari but only driving it in first gear.
Right.
What could be holding them back?
That's the question, isn't it?
It is.
One possibility is that they've been prioritizing profitability over aggressive market share expansion.
Gotcha.
Their impressive profit margin suggests they're quite good at squeezing profits out of their existing operations.
So maybe they're playing it a bit safe.
It's possible.
Focusing on milking the cash cow instead of going out and conquering new territory.
It's a valid theory. Another possibility is that they're facing internal challenges or bottlenecks that are limiting their production capacity.
Right.
Maybe they need to modernize their facilities, streamline their processes, or invest in new technologies to ramp up production.
It could be a combination of factors, right?
It very well could be.
Maybe a bit of playing it safe.
Yeah.
And a bit of needing to upgrade their infrastructure.
Right.
To really unleash their full potential.
Exactly.
Okay.
It's a complex equation.
Yeah.
And without access to their internal data and strategic plans, it's difficult to say for sure what's holding them back.
Okay.
But it's definitely something for investors and industry analysts to keep a close eye on.
Okay, so that's the sales puzzle.
Right.
What about their dividend payout history?
Okay.
Can we glean any insights from that about their future prospect?
Well, NLLCO has consistently paid dividends over the years, which demonstrates a commitment to sharing profits with shareholders.
Right.
This track record suggests they're confident in their ability to generate sustainable earnings and are willing to reward investors for their trust.
But couldn't those generous dividends also be a red flag?
That's a sharp observation.
Yeah.
And it's a valid concern.
Okay.
The fact that they're paying out 100% of face value as dividends this year, meaning they're giving back the entire original value of the share,
wow,
could be interpreted in a couple of ways.
Okay.
It could indicate exceptional financial strength and confidence in the future.
Okay.
Or it could be a sign that they're struggling to find compelling ways to deploy that capital for growth.
So it's a bit of a double-edged sword.
It is.
It could be a sign of strength or a sign of stagnation.
Right.
How can investors make sense of this mixed message?
It requires careful analysis of their overall strategy.
Investment plans and market outlook.
Gotcha.
Are they simply returning cash because they don't see any attractive opportunities right now? Or are they deliberately prioritizing shareholder returns while they wait for the right moment to make a big move?
So it's all about reading the tea leaves and trying to decipher their long-term game plan.
Exactly.
But let's shift gears for a second.
Okay.
And circle back to those legal battles.
Right.
Particularly the wind power situation.
Sure.
You mentioned earlier that it could impact their profitability. How significant could those financial headwinds be?
It's hard to quantify the exact financial impact without knowing the details of the litigation and the potential outcomes. But it's safe to say that continued operating costs without corresponding revenue from those wind power plants could put a dent in their profits.
Right.
Especially if the legal battle drags on for years.
And beyond the financial implications.
Right. There's also the reputational risk. Right?
Absolutely.
Investors and customers are increasingly focused on sustainability and environmental responsibility. Could this situation tarnish NLCO's image
It's possible
as a responsible corporate citizen?
If they're perceived as dragging their feet on renewable energy or getting bogged down in legal disputes, that casts doubt on their commitment to clean energy.
Yeah.
it could definitely hurt their brand image.
Right.
And make it harder to attract investors and partners who prioritize sustainability.
So it's a multifaceted challenge.
It is.
That extends beyond just the bottom line.
Yeah.
They need to find a way to resolve the situation swiftly and decisively, not only for their financial health,
right,
but also to maintain their standing as a leader in the industry.
I completely agree.
Okay.
And this brings us to a crucial question.
All right.
We know an LCO is sitting on a substantial amount of cash. But what are they planning to do with it? Will they use it to resolve these legal issues?
Okay.
Invest in expanding their core operations? Or perhaps diversify into new areas?
Yeah.
The way they choose to deploy this capital will reveal a lot about their long-term vision and their appetite for risk.
Okay, so it's decision time for NLCO.
It is.
They've got a pile of cash, a bunch of challenges, and a whole world of possibilities ahead of them.
Right.
What would you advise them to do? If you were sitting on their board of directors? It's like they're standing at a crossroads with multiple paths leading to different futures.
A lot of options.
Do they play it safe and focus on maximizing profits from their existing operations?
Right.
Or do they take a bolder approach and use that cash to fuel growth and innovation?
It's a classic dilemma faced by many successful companies. There are strong arguments for both approaches.
Okay.
On one hand, investing in growth could position an LCO as a leader in emerging areas of the aluminum industry, like developing new alloys, expanding into high-value manufacturing, or becoming a major player in the renewable energy sector.
So using their cash hoard to diversify and become a more well-rounded player, kind of like spreading their bets instead of putting all their chips on one square.
That's a good analogy.
Yeah.
This diversification could make them more resilient to market fluctuations and open up new revenue streams.
Right.
But it also comes with risks.
Okay. What kind of risks?
Well, entering new markets requires significant investment, expertise, and time to see returns.
Gotcha.
There's no guarantee of success.
And on the flip side, if they choose a more conservative path, focusing on maximizing profits from their existing operations and returning cash to shareholders, what are the pros and cons of that approach?
Well, the advantage is that it's a more predictable, lower risk strategy. They can leverage their existing infrastructure, expertise, and market position to generate steady profits.
Gotcha.
And keep shareholders happy with dividends and buybacks.
So it's a bird in hand kind of approach.
Yeah, you could say that.
But wouldn't that strategy also risk making them less competitive in the long run?
That's the inherent trade-off with any conservative strategy.
Right.
By focusing on the present.
Yeah.
They might miss out on opportunities to capitalize on future trends and potentially fall behind more innovative competitors.
It's like choosing to stay in a comfortable, familiar room.
Right.
While the world outside is transforming.
Exactly.
So it's a tough call.
It is.
It's like choosing between exploring uncharted territory with the potential for great rewards, but also unknown dangers, or sticking to the familiar path with its comfort and security, but the risk of being left behind. What factors should an LCO consider?
Well, they need to carefully assess their internal capabilities, their risk tolerance, and the broader market landscape.
So looking both inward and outward.
Exactly.
Understanding their own strengths and weaknesses, while also anticipating how the world around them is changing.
That's right.
Well, I think we've given our listener plenty to chew on today.
I think so, too.
We've explored NLCO's impressive financials, their puzzling sales growth, their strategic investments, and the legal and regulatory challenges they face.
It's a complex picture.
It is.
But hopefully this deep dive has equipped our listener with a deeper understanding of NLCO.
Absolutely.
Its complexities and the factors shaping its future.
Exactly. At the end of the day, it's up to each individual to draw their own conclusions.
I agree.
And make their own decisions. But hopefully this conversation has sparked some curiosity and provided some food for thought.
And perhaps even inspired our listener to take a deeper dive into NLCO themselves.
Absolutely.
Maybe they'll even consider adding some NLCO shares to their portfolio.
Well, that's right.
But that, of course, is a decision they'll need to make based on their own research and risk tolerance.
So there you have it, folks.
That's it for today.
A fascinating journey into the world of aluminum corporate strategy and the challenges and opportunities that come with being a major player in a global industry.
It's a dynamic space.
It is. Until next time. keep learning.
Keep exploring.
And keep diving deep.